If a Canadian bank fails, how much will you lose? I'm Trevor Miller from Charitable Private Wealth, and with the recent failures of Silicon Valley Bank, what happens if something like this occurs in Canada? You might not want to put your money on your pillow just yet, but you should definitely know where your money is and how it's protected, if it actually is. For those of you that haven't been following the disintegration of SVB and the massive ramifications, check out one of our earlier videos where we kind of go through what happened there. So first of all, is your money safe in Canada in a Canadian bank or any other financial institution? And the answer is yes, most likely it is. Just like the US has the FDIC, which went in and helped out in the US, Canada has a similar protection agency called the CDIC, which has been in existence since about 1967, and they insure about $1 trillion at 80 member institutions. This should be posted at the institution if you go in to the physical location, or you can just check out the CIDC website if you're unsure. Unlike the FDIC that covers 250,000, the CDIC only insures up to 100,000 per account per institution. This number hasn't changed since 2005, and if it was keeping up with inflation, that number should be about 42% higher. So this means that individual accounts count as one, joint account counts as another. So if you have non-registered, RSP, TFSA, RIFs, RESPs, RDSPs, and deposits held in trust, each one counts as one account. But some of the main points are that only GICs, term deposits, checking and savings accounts, and foreign currency are covered. Mutual funds, ETFs, stocks, and bonds are not protected. Now that you know what you get, how likely is it that a Canadian bank will actually fail? The Canadian banks follow guidelines that are stricter than any of their global peers and are required to have sufficient cash on hand to cover a possible bank run, which is what we saw in the US this past week. That being said, it's important to know where your money is and what protections you have. Take our parent company, for example, Harbourfront Wealth Management. As a very high-end but relatively small firm, you should be asking us what happens if. So when it comes to us specifically, first of all, we're not a bank that manages clients' day-to-day cash like what we saw in the US. So the chance of something like this happening to us is very unlikely. We also are the custodian of the fund. So the money isn't actually held at Harbourfront. We leave that to National Bank, who was ranked third in the world's strongest banks list by Bloomberg just a couple years ago. So as unlikely as it is that Harbourfront fails, your money would still be safe with our custodians. But you should be asking this to any bank or institution that you use. How likely is it that you're going to fail, and what happens if? So if you like that video, be sure to subscribe. Follow us, Facebook, LinkedIn, YouTube, all the different places. You can also find us on a podcast hosted by Aaron McGee, and we have a blog on our website, so check that out. Talk to you soon.